On 7th March, SVB tweeted, and it read, "Proud to be on Forbes list of America's best banks." By 10th March, SVB share had tanked 60%. What on earth happened so suddenly? But before all that, let's have a look at what banks are supposed to do. They take money from depositors like us on minimal interest rate, invest the same money in high reward, high risk assets and bonds. Thanks to banking regulations, they have to keep liquid assets for day-to-day demands and also invest in secured market such as government bonds to stay safe. But reality is a bit different sometimes. They make bad investment decisions, or people willfully choose not to pay loans. They invest in areas they do not fully understand. Which brings us to Silicon Valley Bank. Established in 1983, has withstood the great financial crisis of 2008-9, the coronavirus pandemic. Surely a bank of this proportion knows what it's doing, isn't it? Well, yes and no. Here is a few things not so favorable to SVB that happened and coincided. 1. Post-pandemic, the US federal bank sliced the interest rate to almost zero. The market was flooding with money. Venture capitalists were funding the startups without even stressing about the viability of their ideas. Startups, which generally are on the lookout for money, had excess money. SVB, being the darling of startups, benefited hugely. Within 2 years, from 2020 to 2022, its deposits grew from $62 billion to a whopping $190 billion. Now here's what SVB should have done. They should have invested in government securities that are extremely safe but will earn little interest money. But SVB got greedy. They invested in real estate bond market and other such long-term assets. On the contrary, the depositor's money is a short-term liability. Well, it's a clear-cut case of asset-liability mismatch. Second coincidence. Due to inflation, the US Federal Reserve Bank increased the interest rates. All the money in the market is suddenly gone. Venture capital funds are gone. Third coincidence. At the same time, another bank called Silvergate fails. That is a crypto-based bank, spooking the entire startup industry. Now, suddenly, all the startups that had been benefiting from SVB won their money back. SVB is forced to sell its long-term investment at huge losses. Banking laws require SVB to generate remaining capital, that is, a depositor protection feature. SVB defaults and is taken over by US government arm.